House prices have been falling all over the United States due to high mortgage rates. A lot of home buyers are having to wait for either mortgage rates to come down or house prices to come down so that they can afford a decent home. Homeowners are nervous about putting their home on the market because they fear they won't be able to get what they feel their home is worth. And on top of that, they don't want to let go of their super low mortgage rates that they received in the past few years. But what's going on in the Dallas-Fort Worth area? Is Dallas following the same trend as the rest of the country? Well, that's what we're going to get into in today's video. We're going to get into the most recent data for the Dallas housing market and break down some of the trends we're seeing. We'll also discuss what will be the most ideal time to buy a new home in the DFW area this year and what's the latest news regarding mortgage rates. Hi, my name is Trenton Ward, and if you found this information helpful, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. So first, let's jump into the house prices. Across the nation, house prices have finally reached their first year-over-year drop in over a decade, and this is largely due to the rise in mortgage rates over the past year. But despite that, the Dallas housing market has proven to be one of the strongest markets in the nation, because even though house prices have fallen all over the country, Dallas homeowners have seen a 1.6% growth in their home equity. That brings the median home price to a little over $384,000. This is based on the time period between February 2022 to February 2023. So despite the fact that mortgage rates have doubled since this time last year, home prices are still increasing in the Metroplex. But when you look at a particular county in the area, you can see some big differences. For instance, let's look at Collin County, for example. Collin County is the most popular and most expensive county we have in the area. And despite everything that's going on in the housing market, the median home price still rose 2.1% to a whopping $485,000. Now, for some other large metro areas in the country, this may not sound like a lot, but this is a drastic increase from the pre-pandemic prices for the area. So as home buyers look for more affordable options in the area, that leads them to move out to different counties. Take Johnson County, for example. This is where I currently reside, and it's exploding with new construction. That's why, as you can see here, Johnson County home prices jumped 14.6 year over year despite high mortgage rates. But that still only puts the median home price at $364,500. And that's still more than $100,000 lower than Collin County.
That's just ridiculous.
Now, for those that are looking for home prices to come down, this could be seen as a bad thing. And that's totally understandable, because not only have home prices gone up, they're a lot more expensive now as well because of mortgage rates. And that brings us to the days on market, because as we can see here, it's taking the average homeowner a little over 2 months to sell their property. And when they go under contract, it takes about 33 days before they close. That means these home prices are based on the buyers that decided to jump into the market in January. And in January, mortgage rates had fallen to their lowest point since September of 2022. That's when the average mortgage rate was around 6.13%, which was a breath of fresh air for what we've been seeing recently. But since then, rates have been on a steady climb. And at the beginning of March, mortgage rates surpassed 7%. And that's a huge jump in mortgage payments in a short period of time. For example, let's say that you bought a house at the median home price of $384,000. If your mortgage increased by 1%, that means your mortgage payment would increase by $320 every month. So you can see why everyone decided to jump on the 6% mortgage rates when they had the opportunity to. So now let's get into mortgage rates. Next month's housing numbers should be very interesting, because throughout February, mortgage rates had a steady increase, which led us to the 7% mark, which kept a lot of people from getting a home. Maybe we will see the first year-over-year decrease in the DFW area in the next couple of months, but at this point, I wouldn't expect to see anything drastic. If you're looking to purchase a new home this year and you're waiting for the most ideal time, you'll want to pay close attention to the mortgage rates. The Fed is likely to increase the Fed funds rate at least 1 or 2 more times this year, so I wouldn't hold my breath for the mortgage rates to go down too much lower. The housing market did just get some good news though. Mortgage rates recently experienced a sharp decline due to some troubles in the banking sector. Now the average mortgage rate on a 30-year fixed mortgage is around 6.5%, and just about a week ago they were over 7%. Now if you would like to have a lower mortgage rate, you may be able to achieve it by paying points. You'll just have to run the numbers to make sure it's worth the price that your lender is offering you. Okay, if you've enjoyed the content or found anything helpful, let me know by hitting the like button, and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. If you have any real estate needs here in the Dallas-Fort Worth area, feel free to reach out to me. My contact information will be in the description below. And until next time, peace.